right, welcome back. We are back in 2023. Going to kickstart everything from scratch again for 2023. I hope everyone did well for 2022. All right. So why am I doing this recording? Well, this is what I have seen on Go. Right, that just happened moments ago. Well, I did the analysis on GJ and I dropped it on the Instagram and TikTok, and I hope you guys benefited it. So if we could look on Go, right, we can see during Asian, we actually came down all the way down to here, but do not forget that we on a higher time frame, Go is still very bullish. So here, I'm just going to help you guys to see how do we execute on a 1 minute time frame based off what we are seeing here. All right, so ignore this. All right, ignore this. If we were to see on, just imagine on the entire Asian, we picked this high, failed to break. All right, failed to break on this region here, failed to break, showing us exhaustion, right? And doing a pullback is absolutely reasonable. Okay, because why? We need to get more buyers order before we can go to the upside. So from here, during London Open and pre-London, what happened was pre-London actually dipped to the downside, retesting this support, right? And it also coincides with all the previous high, as we can see here, here, and here, all right? So for me, I actually am not a very inclined to taking shorts on Go, especially with the fundamentals currently being the Fed pivoting, all right? And we do not have any news at the moment until February, where we have FOMC, where the Fed speaker will come in. So if you look and dive down to the lower time frame, looking at the 30-minute, well, it makes total sense for people to sell after what has happened here, right? And then sell to the downside, testing this area. So now, how can we actually move into buys, right? Looking at the 30-minute, there is no way you can take any buys until a support is formed, right? So when the support is formed, looking at the hourly, and when this support is formed, it actually engulfs back to the range. So this is the range that it went down, all right, testing this area, because what we should see is price should actually go down to all the way here if it wants to continue to grab more orders, retesting areas like here and here before doing the upside move, retesting this high and breaking this high. All right, and this is the basic things that we know. And then what can we see in the lower time frame at the 1 minute, right? It's very obvious looking at the 1 minute. Yeah, all you have to do is to just draw a simple line. All right, as we all know that you can see this down bottom. Well, I will not advise anyone to take any trades down here because it will be a very high risk, high reward, because we do not know whether we can break this area, and knowing that the previous hourly was a bearish candle. So now when we have this in the lower time frame, what we can see is there's also another line. If you were to zoom out on the higher time frame on H4, you can actually draw a trend line from the downside. So it actually respected the trend line, something like this. All right. So what you can see is after we collected orders, bearish candle start losing strength, we have more engulfing candle, right? Until we have a breakout candle. And this is the retest. Retest of what? Retest of this region before it do to the downside. So supposingly if, and this is what always Go do, we will always retest and coming down. But then if it wanted to go down all the way, right, it should have already did its move to the downside, retesting this area here. Okay. So how can you actually capitalize this? As you can see, very major engulfing candle after the London Open. All right, give it some time, and we have our key level. Our key level here. Okay, so what happened is this area is respected, right? Okay, break off the trend line, right? The trend line is just a guidance. I don't take it as permanent thing. So what we can anticipate is for a retest in this region, as long as we respect the low here. All right. So what is the best entry that you could have taken? This is the entry that you guys should be looking at, right? Failure to break. Well, we can take somewhere here if you want to. This is one. Okay, this can be one. Looking to retest this high. Well, the second one will be more safer, I would say, after we have confirmation of that we are holding this level, but your SL has to be down here. Why I say that? Because you have to manage accordingly if we start to engulf to the downside, right? So what can happen is all you have to do is to retest this, and both trades are giving you, this is a 1:3, this is a 1:2, and to the upside is what we want. So your runners will be running in about this area, and then for this, definitely hitting 1:4. Okay, so this is what you should be doing, or otherwise you can actually reduce it to the down for the second entry. So these are the two entry that you guys should be looking at. All right, do not just blindly sell, not knowing the fundamentals and of course the price action. All right, so this is what I am trying to bring across here. Hopefully it helps with the lower time frame analysis from the intraday time frame with all the analysis that you guys have been doing. All right, and of course, to actually complement this, you're looking at DXY. DXY also dipped down from here. After we had the new high, came back down, failure to go to the upside, use the London Open, and then we just break it down to this side. All right, so this drop here was the pump that we have from the downside to the upside from 1923 to 1929. All right. Okay, so that's about it. Hopefully you guys learned something. All right, see you guys soon.